Aloha and welcome to Java. Thank you kindly for joining me. It's September 10th, 2024. It is Tuesday. There's quite a bit going on, not just in the markets, but in the overall that will affect what is going on there. Just to start with, tonight is much expected and looked forward to in the United States, a debate between the two presidential hopefuls. And I suspect a lot of foreigners will be watching this as well. It's the main distraction, so make sure you don't miss that distraction. I'll personally be doing other things, but I'm sure there'll be plenty of people to tell me how it turns out. So, with this, let's turn to the markets and see what's going on here. Okay, so let's start with our favorite risk indicator is the MMRI. Right now, it's still in high territory at 234.2, but it's retraced quite a bit. Now, yesterday we had the fear greed meter also. It's at 43 right now as markets weakened a little bit. Now, they did run for a while, but the volume dropped as we were speaking about and just kind of hesitating a bit. They were stronger and did show that recovery. And that's what the probabilities were giving us prior to market open. So looking at the 10-year yield and the relative strength of the dollar to take a look into what is moving this. Now, basically what we're seeing is a bit of a more safety play, if you would, moving into bonds and the debt, but this is much larger than it's given. We've got cryptocurrencies are up, showing a bit of strength as a slight safe haven. A couple of stocks I would like to mention is Palantir and Dell. They are moving into the S&P 500. They're bumping out Etsy as well as American Airlines. So there is a readjustment in the SPY. Want to look at the current stocks, basically still having a little bit of that green from yesterday, but the futures are telling a different story. So it's looking at a little bit of weakness is what we've got in here, and then also low volumes again. So with the volatility index going up, it's looking like it will probably be a little bit of level to chop toward the end of the day. Now, what's going on here? We had Asian markets were mixed. We've got some trade and other things going on that I'll speak about in a moment. We had European markets were weak. And so what we're going to see is that at the opening, should kind of continue this green trend, but we've got a shift to safety very possible now. We've also got CPI coming out tomorrow, as well as Fed rate decision next week. So what we're looking forward to is not much today, really, but prior to market open tomorrow, we're getting CPI. Now, this is inflation gauge, and it's what people used to be looking at because it's what the Fed used for their decision making. Now, however, they are looking more at jobs, which have stayed relatively level because it's not showing the firings which are about to hit, probably in this next quarter for sure. So we had Apple come out not do as well as it anticipated with their event. The markets are kind of looking forward to this CPI with a lack of employment data. So I'm expecting personally, not financial advice, but a bit of chop toward the end of the day in preparation for the CPI numbers in the morning. So these are the earnings we're expecting prior to market open on Wednesday. Now I would like to go into a little bit more of the larger picture. And what I think underlying these markets is not just a mover, but also the larger threat to this. Now, I've been speaking about the yen carry trade, and this continues. So, with the yen carry trade, it is still unwinding. Basically, tech sector dropped about 5% the first time this happened, and also with fears of the economy slowing down. Now, Bank of Japan unexpectedly hiked the rate, and the economic data out of the US influenced the yen gaining strength again. So when the yen gained strength, it put pressure on the other trading currencies. So despite the current market sentiment, there are strong earnings expectations for the S&P 500 to continue because of inflation. So This suggests that there's going to be more future growth coming in, but watching the yen and the US dollar charts is critical moving forward, as well as watching the jobless claims, because this is really going to be what impacts things forwards along with the election. So with this, we see in this yen trade, we've also got, aside from the yen, the yuan, which out of China, the PBOC owned China bonds are surging in trading in a sign of interventions. This is basically different form of currency manipulation and intervention. So I'm backing all of this because we had the presidential hopeful unveiling a plan to stop de-dollarization. With this, they're talking about 100% tariffs on countries that are seeking to replace the US dollar basically in trade. Now, this is not going to really work for the things that I just spoke about. There's a lot more things going on with the trade and the trade imbalances. Now, the United States has been running a deficit. We've been getting a lot of goods and having that trade deficit, not exporting, because the United States really doesn't make anything other than inflation and propaganda, basically. So he's also calling to create a sovereign wealth fund for the United States, another investment tool. And really, the United States doesn't need to create an investment wealth fund because they're still the reserve currency. They could just basically print and fund any of this infrastructure that they're speaking about and continue this as they have. So none of this is really as it seems. So, with this on a note, I would like to speak about the real economy right now. Treasury Secretary Janet Yellen came out saying that it appears the United States economy is pulling off this soft landing, even though there's still what she would say downside risks to employment. But what she says very strong growth, deep into a recovery, basically at full employment in her words, and adding that she sees no red lights flashing. Well, she needs to open her eyes because we've got red lights in this economy all over the place. So, with this threat of the tariffs and some of the other trade crackdowns, we've got currency controls coming, capital controls, and we're going to have shortages. Now, this next story is about Kiev because they are cracking down on Ukrainians spending money abroad. This is what a central bank does when they need to control. Basically, Ukraine's central bank, the NBU, National Bank of Ukraine, has tightened the rules on citizens purchasing precious metals, luxury goods, and real estate abroad. So they don't want you out of their dollar. This is typical of a central bank. This is how they control the system and how it works. This is the larger picture. Even though they are deflating it to no value, everyone on that top rung that got all of the basically all of the war funding is doing very well. So starting September 10th, which is today, Ukrainians are limited on the amount of money that they can spend on jewelry, silver, goods, gemstones, precious metals, and then also real estate abroad. So that tells you exactly what you ought to be buying in order to move outside of the central bank. Not financial advice. This is coming directly from what they're trying to do with their control. Now, European Union is, they're saying, suffering from a loss of Russian energy. Now, they had cheap energy. United States tried to control this, had issues with the pipeline, but shipping United States energy there is over 40% more expensive. They cannot manufacture and continue their way of life with this higher cost. They have to pass it on to their citizens. So with this, Europe is bracing for the last of Ukraine's Russian gas deliveries, and this is in the face of winter incoming. So if you're over there, my condolences, because you may have a very difficult winter incoming. And with all of this, this was not really done by Russia. I want to point out that basically Trump was saying that if you leave the dollar and you're not doing business with the US, they're going to put 100% tariff on the goods. Last week, Russian President Putin said Russia had not been pursuing a de-dollarization policy, but the United States locked them out of SWIFT and they had to look for other options. They were also cut out of dollar transactions, had a ban on any transfer of US banknotes, and then also the tight sanctions. So this forced them to move to BRICS partners, and now they're using national currencies in over 65% of the mutual trade. So basically, United States shot themselves in the foot by imposing these strict sanctions. And basically, as they say, the chicken's coming home to roost, and the inflation will come back to the US dollar in the United States itself. So with this, I want to bring up a couple of other things that are building in this direction. Tether, the story, they are investing $100 million into agriculture in a firm as a stablecoin competition grows. Now, the bigger story is not just that, but more that stable coins are growing. And this is what they're going to do to move toward a CBDC, which is a central bank digital currency. So they can establish even more control than this example I just gave you in Ukraine. So with this, we've got states still pushing back in the United States. North Carolina, in this example, pushing back, overriding the governor veto, and they're banning CBDC in that state. So with this, we've also got Ripple Labs. They've been in stories for quite some time. They are running their first test to the United States dollar-pegged stablecoin. So the XRP ledger and Ethereum mainnet's growing with this. So basically what we've going is a race for these trying to become the CBDC for the US. Even though they may not call it that directly, they're moving in that direction. And with this direction comes all of the control and restraints that they will put in with this, along with the tracking. So we've got a lot of good things we can look forward to. There are states fighting back. There's quite a bit of other things that can be done. So look forward to the light at the end of the tunnel. With this, I wish you a green trading day. Just a wonderful day in general, as always, my friends. Stay free.